Time now for a check of the top business news stories. Our business editor, Kate Moody, is here in the studio. Good evening to you, Kate. Let's begin with some news from the US labour market. And it gives you an idea of some of the huge challenges that the Biden administration is going to face.
Yeah, the labour market has really been decimated by the coronavirus pandemic. And as the number of those cases continues to spike, the number of Americans seeking unemployment benefits continues to rise. The Labour Department recorded 965,000 new applications for jobless benefits last week. That is the highest level for a single week since mid-August. It is another sign that the economic recovery is stuttering, in part because of restrictions on the hospitality and restaurant sectors in many states. The overall number of Americans receiving some kind of benefits fell slightly from 19 to about 18.5 million. That includes those who are covered by the Emergency Pandemic Program, which was extended in an 11th hour deal at the end of December. Analysts say that while prospects for the economy later in 2021 are fairly upbeat, the labour market recovery seems to have taken a step backwards. Well, President-elect Joe Biden is due to unveil his plan to boost the economy and protect households and businesses later this evening. It's expected to include more emergency support as well as longer-term changes. Georgina Robertson has more.
With the US still in the throes of the COVID crisis, Joe Biden is turning his attention to the economic effects. His plan is expected to include more stimulus checks sent to American households after the $600 payments made last month. Cash has also been promised to boost vaccinations and help schools to reopen. The president-elect says the emergency relief package will be worth trillions of dollars. Beyond the current crisis, the president-elect may also address some of his other economic pledges, like his promise to raise the minimum wage to $15 an hour. He hopes to tackle taxes, too.
I'm going to ask the big corporations and the wealthy to begin to pay. 91 of the Fortune 500 companies today pay zero tax. You hear me? Zero tax.
In the longer term, Joe Biden wants to invest massively in infrastructure. His goal to make the US carbon neutral by 2050 goes hand in hand with investment in greener technology, including charging stations for electric vehicles. He's also facing pressure from within the Democratic Party to tackle the issue of student debt. Biden promised to cancel $10,000 per student, but some senators want more relief. The scale of the economic crisis calls for significant action from the president-elect. The most recent figures show 140,000 jobs were lost in the US in December alone.
Well, once Biden takes office, France's finance minister hopes to tackle frayed transatlantic trade relations. Earlier this week, new tariffs on European wine and aircraft parts took effect, part of a long-running dispute over subsidies for Airbus and Boeing. The Trump administration has also threatened tariffs against French luxury goods in retaliation for a new tax on digital giants, although the U.S. Trade Representative's office said today it would not be taking specific action in connection with similar taxes in Austria, Spain and the U.K. Well, France's Finance Minister Bruno Le Maire said he would be travelling to Washington as soon as possible with the backing of the European Union to resolve those trade tensions.
At the top of the agenda will be to clearly say stop to the trade war between the US and Europe. Stop to the sanctions from the US administration on French vineyards, for instance. Stop to the Boeing Airbus case, which is clearly not in the interest of neither the US nor European countries.
Let's check in on the day's trading action now. Wall Street has given up some of its earlier gains as it approaches the end of its trading session. The S&P 500 dipping underneath the flat line there. The Nasdaq still up about 1/3 of a percentage point. It did manage to hit a new high earlier in the session as Intel shares rallied as much as 7% earlier on. The major European indices ended higher, the FTSE 100 leading with gains of about 0.8%, the DAX and CAC 40 about closer to 1/3 each. Shares of the retailer Carrefour dropped after French government ministers said they were against a proposed merger. Moving on to some of the day's other business headlines now. Germany's economy contracted 5% last year, far less than many economists had predicted, despite the coronavirus pandemic. The Eurozone's largest economy saw a 10% plunge in exports, but expects to recover in the second quarter of 2021. Households have increased their savings rate, which bodes well for consumer spending once restrictions are eased. OPEC has maintained its forecast for global oil demand this year at about 96 million barrels per day, despite the ongoing uncertainty that's linked to the pandemic. The producers group has scaled back its output last year, but has agreed to slowly begin boosting its pumping in January. And Norwegian Air Shuttle is to close its long-haul operations as it struggles to deal with the coronavirus pandemic and underlying debt problems. The low-cost carrier made a name for itself with cheap transatlantic flights, but says it will now focus on European destinations. The decision will see it reduce its fleet from 140 aircraft to about 50. The troubled French carmaker Renault has outlined a new roadmap for a slimmed-down, environmentally friendly future. CEO Luca De Meo will be paring back output and overhauling the group's brands. Camille Nedlek reports.
Renaulution may be the carmaker's new slogan, but phase one of that strategy is retreat. Gone is the ambitious vision of expansion of the Carlos Ghosn years. Under CEO Luca De Meo, all roads lead to efficiency savings and cost cutting.
If you want me to boil it down to just one simple slogan, it will be moving our focus from volume to value.
But some think the plan won't be enough to turn things around.
Des programmes financiers qui sont plutôt vraiment un plan de redressement qu'un plan de survie plutôt qu'un plan de relance à proprement parler.
Factory capacity will drop by a quarter by 2025, and although no plants in France will close, a third of the 15,000 job cuts announced last year will be French workers. Renault will be slimming down its production line, including the number of engine types. The automaker aims to become not a car company working with tech, but a tech company working with cars, with a fifth of its revenue coming from services and data by 2030. Half of all launches will be electric vehicles, such as this high-tech take on its iconic R5.
When you are able to reinvent some cult products of the brand, it lights a fire under the whole brand. This is what we expect with the new Renault 5.
The change in tack comes after sales plunged last year during the pandemic, forcing the firm to take out a €5 billion state-backed loan.
We'll see if that is a successful strategy going forward for Renault.
Let's hope it is. Thank you very much indeed, our business editor, Kate Moody. That's it from me. I'll be back in a couple of minutes. Don't go away.